Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn, Senior Manager Trading and Derivatives at Charles Schwab. Hey, this is the last class of the week. Done a review on a number of different topics this week. Folks, tariffs, economy, global conflicts sort of situations, as well as earnings and upcoming earnings. So we've got quite a bit to share here today, along with a number of different indicators to look at as well. So great to have you on board. We'll take a look at that in just a moment here. Would like to welcome you all. And yes, we've got, let's see, BJ on board with us. Haven't seen BJ for a bit. Great to see BJ. We've got Will and others here, Michael, and yeah, China. Others folks were joining the chat by a good friend and colleague of mine. That would be Connie Hill. You'll see her in the chat as CH. All right, great to have Connie here as well, folks. Well, a lot to take a look into today. Plenty to discuss. And so let's do this. Let's dive right on into it, get started here. Information is provided here for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Paper money software application for educational purposes only. Investing does involve risk, including for some products more than your initial investment. A look at the futures disclosures. Futures or futures options trading involves substantial risk, not suitable for all investors. We do not trade futures here, but we do like to reference the charts. We threw those in, those disclosure items. And finally, folks, past performance is no guarantee of future results. Having said all that, we're going to go right over into our charts here. We're just taking a look at Cisco that did beat earnings, but I'll tell you what, beating earnings is one thing, but the guidance going forward is quite another. That is a fairly decent sized gap, folks. You can see there right on the chart, but that just happened to be up on my screen. So let's do this. Hello to you, Kevin, as well as Hamlet and others. All right, Mike, let's see. Yeah, I do, just a quick note. Yeah, because it just came in from Michael, in terms of the money flow versus the Chaikin money flow, which is fascinating because I think both of them are actually quite valid. And if you think about it, we'll do this here too. In fact, I'm going to show you this. It's an interesting question because it's one I did want to address here. On the ES, ES does have volume. We just talked about futures there. And you'll notice that the ES, although we've been going to a sideways channel here on the markets, the money flow, also very similar to the on-balance volume, has been dipping, right? Lower lows and lower highs, yet prices have really held flat. So oftentimes that can be a short-term sign of weakness. If you see that continue, well, according to the money flow, you could just be, what you're seeing is just you're seeing money coming out of the market and not staying in. Now, we want to talk about this because we are still staying within our bounds, but just a quick note on that. To answer your question, Michael, specifically, you know what? With that Chaikin money flow, which is really interesting, we're actually tying in this right here, the RSI to it. It's kind of a combination, isn't it, of closing prices, actual price and data, as well as money flow figures with the Chaikin. I'd like to separate them out, but the Chaikin money flow just blends a combination of those two together. And Michael has typed the name of that into the chat. So if you want to take a look at that, you could do it. But it's funny you'd bring that up because effectively I am using basically the Chaikin money flow just broken down into two different areas. Now, there are some differences there, but yeah, they basically price momentum tied in with volume, potential volume accumulation or distribution. Good question, but I do separate them out. I do think it can be a valid indicator for sure, depending upon, just the way you want to do it. But all right, everybody. Well, we've got a few things to look at. First and foremost, I just want to state this. There's been a lot of discussion about the economy. And as I go back over here, in fact, we can look at the ES. A very similar, well, just a reference, SPX. Shoot, we could just stay here. I've got my lines in place already, kind of representing this sideways channel. And I did build out, as I always like to say here, alerts, folks. And I've had those build out for a couple of weeks now, and I still haven't gotten hit either way. So we're still in that consolidation, sort of a sideways channel there. Quick note on alerts too. Just wanted to just quickly state they're not guaranteed to be delivered or delivered with any specific speed or time frame. It should be used as should not be used as a replacement for actively being aware of your positions. I just bring that up because they're not guaranteed to be sent out. I have not had an issue with it myself, but I wanted to state that for you there. But those I've got them listed on upside, downside, as you guys already might have known, but just to give us a reference point, because if after a long consolidation, if we get a break, we talked a little bit about this last week, one way or the other, and we're still There, we came close this week, but we did not trigger. I mean, we didn't even get close to it. I mean, I'm sorry, we did get close to it, but we didn't hit it specifically, right? We didn't touch it, and we're just kind of holding still in that 200-point range. Now, the longer that consolidates, it could be a bigger move. And by the way, we might have some drivers this upcoming week to finally get us out of there. So I want to talk about those drivers specifically today as we get into it. One quick note I have to mention, though, is the economy. A lot of what I've been reading about the economy this week really does tie into this right here. So the jobs report, that is the economic situation as they refer to it, that released by the Bureau of Labor Statistics, folks, that's going to be due out on March the 6th. So 3-6. We still have a ways to go, but if the job, and that, by the way, that's going to be for February. So for Feb 2026. And if you start to see some positives there, and we have seen some positives in a number of economic data reports, that could be an indication also possibly of an extension up if it's good, or possibly down. We've got a range and we can be keeping eyes on that for sure. Okay, the next key thing we need to talk about, which really had an impact today on the markets, and I would say a short term. In fact, if we look at the 30-minute chart, you'll see that announcement that we just came right out of the gates here pretty sharply, and that was the Supreme Court ruling against the tariff situation, right? And we talked about this, if you guys remember, about a couple of months ago. We talked about tariffs, and we said there's been a lot of concern about tariffs because the expectation was that tariffs might end up being cut. Excuse me, the tariff situation, might be recognized as not being workable through a constitutional perspective, and so that's been shot down by the Supreme Court. But one of the things I wanted to mention is this is what happened this year under the tariffs. Do you see it? So you say, what happens outside of the tariffs? And we talked about this. If this is what we get with the tariffs on, if we take the tariffs off, there could be a short-term pop, basically, and that would be benefiting really consumers. And I've got kind of I just taken some quick notes here as I've gone through this to look at it, but there could be a short-term boost to the economy. That could be one of the drivers, folks, to get us above our top range right here. It could. We could bounce back. Now, where we might see that at, some of the biggest beneficiaries may end up being retail. Think about products that have been manufactured outside the U.S. but are being imported in. And there's probably several you can think of that even we purchase individually. Those kinds of products, though, could be beneficiaries. And I do remember like Costco saying that they had some issues. It was quite expensive for Costco on certain fronts in terms of the tariffs or whatever. I don't know if this was an anticipation, because a lot, starting this year, there was a lot of anticipation that may have been already baked into the markets a little bit, that tariff situation was going to occur. If you look at Costco short term, though, that popped up a little bit, but that big move could have been tied into Costco. We actually didn't have any great news necessarily, but we took off. So it could have already, played a role in that. But just think about importers, companies that have had to import into the U.S. Those are the ones that were most heavily impacted by tariffs, because the administration is basically saying that there are some workarounds to it as well, that they still might be able to put them on, but we don't know for the short term, and there still might be some positives in the market depending upon what could happen there. A couple of notes too. You guys know, like, for example, steel companies, steel, aluminum for autos. Now that, I believe, was congressionally passed. So there's law on those. Those are 50% tariffs, but those are done through a congressional measure. And if you look at a company like Nucor, it didn't move at all on that. So it just kind of, it's been strong this whole time. But remember, it's got those that I believe, from what I'm reading. And I remember the passing of it. At least I read through it, portions of it. That's a 50% tariff they have on steel and aluminum coming into the U.S. And the beneficiaries of that have been those companies. Quick note over here too. What about Alcoa? See the trend? What did it do today? Basically nothing. So those, I believe, would stand in place. Okay, so keep that in mind. Uh, there are some fairly well-known analysts out there that some of them are, kind of saying that the biggest beneficiaries of the tariffs being taken down right now would be tech in the tech and AI space. Quoting it would be something like a net positive for tech and AI. Well, that's really quite interesting because technology, if it is a benefit, the Magnificent Seven, I don't know if they want to change that name now. I don't know how magnificent it's been lately on a lot of these companies, maybe the OK Mag 7. But if you come over here, yeah, I mean, it's been kind of down to sideways. Let's just go through them. Amazon had a little bit of a pop here, but facing a big gap right there, not to mention formidable resistance over there. That's longer term. We'll see if that holds up. Google, one of the stronger ones, but it too is dipped. Good move today back, coming back. Let's go to Meta. Look at these. They're all kind of down though. Microsoft, another one down. Tesla, down, holding up a little bit. But then there's NVIDIA. I want to talk about NVIDIA here in just a second. There's a look at the Mag 7 altogether. And you can see that like we saw on the S&P 500, if I just draw some lines through here around 2,724, this is the Mag 7 all together, just plus, 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 adding them all into the symbol box, you get the chart. We're off the bottom of the range. Now, if that's true and what the analysts are saying is correct, and if it's a net positive, well, maybe we could make a move to the upside. And remember that all of these Mag 7s are right in here. So there is another possible catalyst right there on the tariff front for a move to the upside. But what do we have in place? We have price levels, and price levels are so important because, if you're going to stay underneath them, prices aren't going up. But if you can break all of that coiling motion, bam, can get us to potentially move through. So right there, some of the job and economic numbers. Now we're talking about tariffs here. And we talked about the downside to tariffs over here when they were put on and what that might mean to the upside. So if you think about tech companies and AI, think about importing technology, products, et cetera, outside the US or wherever that might be. What does that cost look like if you take the tariffs off? Is it removed? It might be, So it's just a continuing process at this point, and it's really kind of going to be interesting to see how it unfolds and seeing what the administration can say, because they're saying there are measures that can be taken to reimpose these tariffs sort of in different ways to sort of maintain a more level playing field in the economy, which I think is a net positive for America because it hasn't had that for a long time. But I'm just saying that's they're just trying to balance that out. Will they be able to do that with those additional measures? We don't know. So these other companies might benefit, and so we're seeing some of that right now, and maybe off to the top, but maybe more details into next week, folks. All right. Well, the next big one, obviously, is the conflict in Iran. And what I want to do with this, I have gone through and I've highlighted the last 8 wars on the chart. And I just want to show you, because I don't think there's anything that better highlights it as to what actually happened after these wars. So let's go through those, and I'll take a look at the chats here in a second. But I'm just going to go, this is so cool because we have the tools right here at our fingertips. I'm just going to run Max Daily chart. And I'm actually going to move back. I'm going to start off like over the past, 35 years or so. I want to move back to Operation Desert Storm and just show you. I've got it highlighted in blue, and we'll kind of see the reaction and then what happened afterwards on each of these wars. And that was, the combat air phase that was to liberate Kuwait, as you recall. Hard to see in that blue. I'm going to take this off, remove that drawing. It's this day right there. It was January 17th of 1991. And by the way, what we're looking at here is not the buildup to the war. The buildups happened earlier. This is actually the start of the fighting. We could argue that the buildup phase in Iran may have already occurred, right, with the aircraft carriers. So if we're looking at this sort of like as a parallel, we've already had the buildup phase here with Iran previously, where we'll zoom to the future here in just a second, but this was the result of that, that what was a big day up. In fact, it was actually a longer term continuation. I'm going to take us into our next war, and this happened on December the 9th, which was right there, this bar. and this was the Somalia intervention in Mogadishu, uh, where there were, American lives lost, a few things too. But you could see we actually dipped for a couple of days here, and then there was actually a rally that happened after. Now, we don't know exactly how this war is going to unfold, but we're just saying these are wars, in the past. The next one is the Bosnian War, and that was in 1995. We'll zoom over to that right there. This is our next one. Oops, sorry, 90. Yeah, that is 95, right? No, that's 94. Hang on a second. I have 94. Was that? No, there was I'm not sure. Okay. There was one in here as well, but it dipped. Believe, hang on a second. That was some other situation. Let's go to the 95. August of 95. And this, are we in 95 yet? No. So it's I should have it highlighted on the chart here for us to get to. There you go. Right there. So this is the Bosnian War. That was the heavy NATO. It was actually a NATO air campaign. And that happened right on this date right there. Right there. And you can see it was kind of in a consolidation, which is interesting. By comparison, we are in consolidation too currently. It happened right on that date right there. And we actually ended up breaking up and going up higher on that one. So the next one would be the Kosovo War, and that's in 1999. We'll just see the mark here on the chart when we go through it. Where are you? Oh, 2001. Okay, here, let's see. Did I pass it? 99. Oh, I guess I'm going to have to mark this. I thought I marked it. Okay. That might have been that earlier one I was just off on. Okay. March. Yeah, that's it right here. Okay, just a little bit over here and we got it. This was the March 24th, 1999 Kosovo War. That was the 78. It was supposed to be a very short air campaign. This turned out to be a 78-day air campaign, which began right over here on March 24th. This day right there. I'll highlight it here just quickly. March 24th, right there was that day. Remember, this is the actual fighting that began on the war. And we can just take a look, and but 99 too, there were a few things going on behind the scenes here too. But yeah, we dipped a little bit maybe ahead of the war, but then it shot higher. Then we move into the 2000s. Try to do this a little bit quicker, you guys, as I get to it, but I had to show you these. Yeah, there it is. Okay, so 2000, this is Iraqi war. This is March 20th, right? Oh, no, I'm sorry, Afghan war first. So this is October 7th, 2001. And you can see that this looked like one of those other ones where there's a consolidation. It happened about right there. It pulled back and ended up rallying short term. But short term, it actually went down for a few days. The next one is, and we're almost done here, but these are fascinating to actually see. There it is. So this is the Iraqi war, and that is this was the invasion to overthrow Saddam Hussein over concerns of weapons of mass destruction, and this occurred on the 20th, right there, right here, I should say. So it's kind of an interesting date, but it was right there. We kind of rallied up to it. And then what did we do? Kind of like the Afghan operation, it dipped down for about a week, but then it resumed to the upside. Okay. And we've got two more. We've got the one in 2021. This was the Libya. We got a ways to go. There we go. There it is. So this is the Libya operation, March 19th, which was right there. Actually, it was over the weekend. It was over the weekend right there. So that one really just kind of paused for a day and sort of rallied. Of course, it did dip back down, but we're looking maybe at short term over here. That's what we saw. That was the Libyan civil war. And last but not least, the war against ISIS. And these were, mainly airstrikes again, which my understanding is it could be the same way with Iran, if in fact it does happen. This is what we had right there. It was August 8th, right there, this bar. So it was kind of an upward bar on the day that the fighting actually began as well. So generally speaking, big picture going across the last 8 wars, a lot of times there is an upward move post that event. So you kind of sometimes you'll pull down in expectation of it, but maybe the move back up, and sometimes you'll jump up and dip back down. But a lot of them did kind of follow through to the upside. You never know, but I think it's always interesting to kind of take a look back and see what actually happened historically. So hopefully that gives us some indication, some things to look at, to consider what may occur. And you never know, what can occur afterwards too. Does it not go as planned? Maybe there's an expectation for no losses and there are losses, or who knows how that might affect. But what you could say is if we are in a sideways channel here and there is anything like what we saw on the majority of those, a post-war starting rally, well, we're looking at a few different things there that could get us above possible drivers. Now, could it also be to the downside? Absolutely. The bottom line is every one of those is drivers, right? The conflict with Iran, the economy, as well as tariffs. So, okay, so we'll be watching, and really kind of the key comes up. What level does it break? And then you look at the news and try to associate the news with the level breaking. That'll give us a sense of, hey, is it kind of a risk on in the market, or is it more of a risk off? All right, that took a little bit, but there's a lot going on, obviously, so we had to hit it. But let's do this next. I want to take a look at, well, I'll pull this up here. I think we're all caught up. Oh, there is a survey in the chat as well, folks. Yeah, hey, if you get a second to fill that out, if you're getting use out of this, our discussion here, consider smashing that like button. This class specifically, markets and sectors, and we will today, like we like to do, drill down into specific stocks that might be interesting this week or next. But give that a smash on the like button if you do like it. There's a survey in the chat. Thanks for posting that, Connie. All right, with that, let's go ahead and take a quick look at the NDX. Then we'll take a look at some sectors here as we dive on into this. Actually, let's look at the VIX next. But I wanted to make the case for maybe the NASDAQ being in sort of a longer term, more of a larger consolidation range. I think you can see that. It's not perfect off the bottom. We have a couple touch points off the bottom. We got a couple touch points off the top. When you get that, we're kind of channeling. And we didn't quite hit the bottom around that 24,000. There's 26. So interesting, on the S&P 500, it's about a 200-point range. On the NASDAQ, it's about a 2,000-point range, but very, very similar. And we'll see if maybe tech does benefit from the tariffs, like a lot of analysts are suggesting, and we'll see what kind of a move we get from that level. A quick note, too, as we were looking at maybe a lower dip, if the markets were to dip, one of the key things we want to keep an eye on here, that right there, the VIX at 20. And we've just been hovering around that range. We haven't had like solid conviction about breaking above, but I'll tell you what, there has been some conviction about holding that level around 20. You can't really see it there, but that's the 20 level, which oftentimes can be an interesting level for the possibility of, the S&P 500 taking a bigger dip. But not really. It's really market's kind of holding its cards here in terms of volatility. So what you can do in this case is simply take a smaller range. If we start to break below these recent lows on the VIX, I'm saying, so like breaking below and closing below these lows are like around 19, we might start to come back down. What does that normally spell for the markets? Well, upward moves, and it could get us above these highs. That would be the scenario if it broke. Now, the other side is if you start to take out these levels here and you just start breaking through, well, the risk is something like this. And if you got to move like that, you have to say there's just going to be a lot more force to potentially break the lower level on the SPX, the S&P 500 index. So it's a good little gauge to keep an eye on there. All right, well, let's move on over into our sectors. And I want to really just look and see what's been moving over the past 1 week right now before we go into it. Let's see, Zink said, by the way, do you pay attention to moving averages on the VIX? That's actually, you know what, that is an interesting point there because that would give us another sense if we are holding above those ranges. Yeah, I think that's definitely a valid point. As opposed to just looking at lows on the chart or highs, use something like a shorter, a moving average, a monthly moving average, like a 20. Mhm. And yeah, with that too, the gold and silver, that is actually where I wanted to go right after this. So I'm going to hit that in just a second, but I wanted to show you because we do see, we had seen materials over here over the past week. They were holding, kind of positioning themselves for a breakout, but gold and silver were still consolidating until today. And we saw a little bit of a rally. In fact, so from a comparative basis, right? Just looking at how these companies are comparing relative, so relative performance to the S&P is what we're looking at. Got the SPX down here. What's moving stronger or weaker relative? Materials today has had one of the stronger bounces, and so too has industrials. I'm going to go ahead and just highlight this right now. Let's go ahead and just go to our max sell grid so we can see it. So there are the materials. They spiked. Financials spiked a little bit, not too much. Discretionary throughout this week have actually been making higher highs and higher lows. Staples have been one of the worst performers on the week. As you can see, in fact, I'm going to try to back in and back out. There we go. Yeah, there's our Monday now. Cool. We've got the whole week now. So underperforming have the staples been. So too has healthcare. I'll talk about those in just a second. There are your industrials, a bounce in industrials, and earlier this week as well. Just going through the 11 of these right now. Technology really kind of down the last couple of days or flat. Okay, communication services, the biggest outperformer as of late in this group. I want to take a look at that group here as well, and then we'll go right into gold and silver. But here are those consumer staples. I'm going to pull it up right now so you guys can see this. So I'm just in the S&P 500. Oops. Let's kill that one right there. S&P 500. What companies do we have within the S&P 500 that are also in that group right there? Communication services, pulling up the entire sector. In other words, what companies have been moving, right? Click on scan for the past week, which is what we were just looking at. Let's have that filled in, colored. There we go. OMC, the biggest mover, pushing that group up. These are all those companies we're listing right here are what's accounting for this performance above the S&P. So leading the group. In other words, if they're leading the group now, if we break out above our highs on the S&P, just maximize it, this range, we break out higher. Sometimes the strongest leaders were giving us a sense of what's gearing up to kind of break out already. We're going to look at these charts here in just a second, but these are the companies. Let's look at them. So OMC, advertising and movies entertainment. There's Google down there. Netflix is also performing. These are all in the green on the week. Back to charts. Let's just pull this up so we can see it. 6-month grid chart so you can see exactly that. Now, these are just the charts. We can see on a 1-week basis, even though communication services don't show much down here, they've clearly been outperforming the S&P 500 down here, clearly. But so if that's the case, what that can do for us is give us some insight that this might be a big enough reversal point to kind of get things going here. Perhaps it might be fundamentally, we'll see, but it's sector performance wise on a potential rotation there, relative performance really quite strong. So we'll see if that recovers and recoups. And you do get some technology in there like Google, right? So you've got that. Here are the staples. The staples underperformed this week, but if we look at those guys right there, it's kind of a little bit of a flag pattern. Talked a little bit about this in my class. yesterday, which was on our ThinkScript class, where we were looking at finding big reversals based upon percentages using the zigzag indicator on a scan. This was one that showed up like over here and down here for early potential moves. Back to materials over here, sideways. Now that really is a flag, and that can give us some indication of what maybe the gold and silver miners are looking like. Because not necessarily just gold and silver miners, but think about other companies in this group. But that's looks like, and we've had a few of these little type flag patterns for a while now with this trend. Okay, and so when it consolidates and kind of holds its price range, sometimes those are geared up for a full target move to the upside. We'll see, but you can see, what can really help to lift those is right over here. The gold, just referencing our futures again. Let's pull these guys down. So yeah, there's a, whoop, take that off, sorry. We're not buying anything. We're just looking. All right, there's your gold coming up, and there's your silver right there. So gold just starting to get a little bit of a bid for the first time in a little bit. Look right there, folks. Look at this right there. Those prior highs. The one thing I'll say is higher low, higher low, higher low, kind of coiling up for maybe a move. One of the key drivers for gold and silver miners is obviously the underlying gold. Once you get it out of the ground, you're mining it out of the ground. What is it? What is the price you're getting for it? Obviously, that would play a key role. Silver too, sort of a bigger bounce there. This is kind of an interesting one. It's sort of like my eyes are just prone to some of these price patterns, but like, for example, you could say shoulder, head, shoulder. If that were the case, we're actually getting the trend line break today. We don't know if it'll hold, but it's currently breaking above this really downward sloping trend line right there. Do you see that? So a price projection using something like this on silver itself, which again could influence the silver stocks. You take the high and the low across that upper neckline, and then what you're doing is you just simply, I'm just going to duplicate it and move it right here, right there. So that would be at least a price projection if this was a head and shoulders pattern with a sharp move. But I mean, when you stop and think about it, what could be influencing this? I would say global tensions. The Iran situation could be. Perhaps tariffs could play a role. I'm not 100% on that, but maybe you could say under, sort of economic uncertainty, which is really what gold and silver are. A lot of times these precious metals are known, maybe more of gold, but interesting. Could be drivers to get us back up into that upper target range. Okay. All right. Very good. Let's take a look at, so there are some stocks out there too. Let's say as we dive into some of these, I did want to take a look at big picture market. T-Mobile earnings. This had kind of an potential earnings gap and go was what we call it. We don't know if it will go for sure, but it did break above a resistance level. You can see the earnings right there. And we broke up higher and we just kind of rested. Sometimes, it's these big, longer term kind of reversals that could be interesting. I did post this out here in my X channel just for you guys if you want to take a look at it. It's just the earnings beats that were recent over a period of time. This is just the NASDAQ 100. I don't think T-Mobile's in here, but I put all of them that were in the positive that had earnings beats that came in. And yeah, so just NASDAQ 100, you can see there were a few semiconductors in there, AMAT, ADI. This is the percentage of beat over their expectations. T-Mobile had a beat as well. I'll throw this in too. That was a good reminder to just kind of post that for you guys. Be sure and follow Connie. Connie, he'll see us as well, but there it is right there. That's the link to it if you want to click on it. All right, and I think they did beat. The guide, a lot of times when it runs higher, It's no, they missed, but I think the guidance was higher. I think the guidance was higher, is what I saw. So, anyways, it's not so much what you did, it's what you're going to do a lot of times in the market. And by the way, I don't know if this could be a sort of cup and handle. It's like kind of an interesting cup, but there's your handle. And it's looking a lot like that bull flag right at the end, right? So it's been down for a while, but that's kind of a big, powerful type move. In fact, if I'm just going to add this on, here's that zigzag percent that I talked about. We built a scan on this yesterday, right there. And do you see how you are off the bottoms? A lot of the numbers that a lot of analysts will use is 8%. When you get that, a lot of times it can be around earnings. It's because it's powerful enough, but an 8% shift, there's a change in the colors right there. This just tracks 8% moves on a default. The shift happens about right there. It happens oddly. I don't know exactly why, but it's something around the 8 to 10% level, right around the prior high. So if you start taking that out, sometimes it can mean a greater shift up. So we build a scan on that in that class, but it's one I hadn't done before. In fact, it was hard to find actually a way to do it, but it is doable after all. Let's take a look at VZ real quick, and then we'll go into some of the other stuff there. VZ's hit like way over here, but yeah, look at that. Wow, that's a massive move. I don't even know what's the driver behind that. Oh, it's down for a while too, but yeah, interesting. Big move up. I'm just going to take this off real quick, and we'll hit some of our others there. Some other stocks to look at too, but before I do that, let's just hit a market and sector review. Okay, quick note though, just as I'm in here, you guys, we looked at the sector grid. If you guys don't have I'll always post this for you. This is not a think script, but think scripts aren't guaranteed for timeliness or accuracy. This is not one of them. I'll post this in the chat, and I'll also put it in the description section down below. That is your sector grid. I think I saw a comment on this. I'll also post the other one, the shorter term one, in that after the video posts as well. But just a quick note, this can be very, very helpful on top of the weekly sector performance, relative sector performance, in looking to see if, what areas, huge spikes, actually real estate, utilities, and then we had consumer staples too, energy, and over here as well. Now we might be getting the beginning signs of it in consumer staples. I didn't want to leave this too soon, but yeah, we can dive into the stocks individually here if we want to see which ones are moving, if we see the patterns, because these are smaller baskets of stocks. Like we just looked at this one over here, right? And there's only 23 companies that make up that big spike off the bottom. This is like the strongest this week. So a great way to find them using the platform as well. All right. So much to discuss. So I'm kind of going through it a little bit quick, but great job keeping up, folks. I want to say that the breadth indications in terms of advanced decline line hitting highs over our range, that is really a net positive. So this is the NYSE, 2,700 plus stocks, market breadth. Think about it that way. You're thinking about advancers over decliners, and how many of those have we had in a row? Quite a few. Folks, this is really hitting highs. So where this is actually kind of, you could say this, the advanced decline line has broken out, but prices, SPX, have not. This could be a leading indicator for an upward move. Next up, SPX EW, another potential leading indicator. This is the equal weight, so equal weighting each of these. You can see us coming up here right near highs. We're not in the consolidation range. Higher highs, higher lows. In fact, there's an all-time high in that SPX EW. Get no indications from the Hindenburg Omen, 52-week new lows versus highs. Not seeing that, just because probably we're seeing so many highs taking place. This is a weekly chart, but when we start seeing this, it can be signs of fracturing in the market, some of those internal trends, and we're just not seeing that for a while now. All right, had a huge spike over here in terms of new highs in the NYSE. terms of the NYSE. And yeah, coming back to our seasonal time frame, folks, we're basically doing nothing for February, just side and actually much of June. Excuse me, January. What has the SPX been doing? Sideways channel. The question is will we get a break and kind of follow through with some of these seasonal type moves? And that's the real question. Do we get that seasonal move breakout or do we not? But traditionally, we're looking at a 10-year move on the S&P 500, and collectively, on average, we go up. But this doesn't have to happen. But on average, that's what you get: 10-year, 20-year, 50-year. This is what the kind of the markets look like, percentage gains from year to year on average. Because, well, this is very safe to say we've been getting a very, very long-term trend to the upside, have we not? Wow. I mean, I should say this right there. There's your weekly. So now you know why the seasonal points up, but that just also shows you month to month what can happen over that time frame. We don't want to forget this. The last one on our list is our volume profile. These volume profile peaks are interesting because if you do, and this lines up very well, use a different color, very, very well over here with a dip, we start to break just the amount of volume starts to shelf off here. That means you could come back down and maybe test that lower level where it pairs off. That's to the downside. Now, the upside, we don't have it, and that means that you just might not get as much consolidation on the upside, and that might be easier for a breakout. So what's interesting here is that you are getting that consolidation, and volume profile also kind of shows that if you get outside of either of these ranges, up here, down here, and that is these two ranges here that we already looked at on the chart, it could be a faster type move, which also technically makes sense from an extended coiling pattern. Tightening range, that is. All right, as you go into it. By the way, we're nearing the end of earnings season. I'll finish up on this guy right here. This might be a mover that could help us get going. This one's been in, and I think you guys have heard of this one. Many of you have. NVIDIA. I've got a example trade from the swing trade class in here, but we've been going flat since the end of basically July. Basically, we've been going sideways through here. Now, it too also has a tight range right there. Watch this one because right there's a big progression that the company's looking at right now, and they've been meeting a lot of earnings numbers, but prices have been flat. So that's a sideways range in and of itself. It's a transition from their Blackwell to Rubin. That would be RUBIN as opposed to the Rubin sandwich, RUBIN. But it's the transition between those two and what that could mean for the company. But they've actually got a product in there that could help to facilitate an upward move if that product launch and everything goes as planned. But this is a long consolidation. Could it happen? This could influence technology, which is certainly a key within the S&P 500. I mean, this holds a big weighted component of the S&P 500, right? Market weighted NVIDIA. So if it goes up, it could have just a stronger pull on the markets. Folks, it's been great being with you today. Remember, there is a survey in the chat. Have a fantastic weekend. I hope this was useful, helpful for you. If it was, consider smashing that like button. Thank you so much, Connie, for your help in the chat, as always. And yeah, there's some patterns maybe you guys are picking up on here to take a look at. Thank you all. Have a great weekend. See you all next time.